beautiful shot. You don't want to be in New York on a weather day like
No,
you just want to be inside here, right here.
I like the people that have big dogs in apartments. Those are the people I really like. And they look for that one individual tree on your.
Okay, I thought I was going to have fun with
what
you.
What is
but
great about it? The Chinese food? You get it like
we're talking about Manhattan now.
Yeah. What is?
I had Chinese for last night for dinner.
Museums? How often do you go to a museum?
Once a week.
I live right across the street from a museum.
You do?
Yep.
Okay, here we go. Goldman Sachs reporting its quarterly numbers tomorrow morning. That's after Citi and JP Morgan both beat expectations last week. CNBC's Mary Thompson has a preview.
Well, a number of analysts and a lot of other people think that Goldman is going to be is actually going to miss consensus numbers this quarter. While Goldman's results are likely to get a boost from its investment banking unit, a weak trading environment will probably overshadow this and result in lower year-over-year revenue and earnings for the firm. Unlike some of its rivals, the investment bank's results won't get a lift from an improvement in consumer credit.
JPM and Citi, because they're commercial banks, were able to release credit reserves. And so that provided some of the lift in terms of their outperformance. Well, Goldman isn't a commercial bank in the sense of lending. So you're not going to have credit reserves that are going to be reduced at a Goldman Sachs.
Analysts surveyed by First Call estimating Goldman's revenue will fall 8% to $8.14 billion from $8.8 billion last year, while earnings are forecast to fall to $227 from $275 last year if you exclude the $1 billion in charges Goldman took to cover a settlement with the SEC and to cover the UK bank payroll tax last year. You include those charges, and Goldman earned 78 cents in last year's second quarter. Now, like other financial firms, Goldman's core trading franchise was hit in the second quarter by a number of factors. Continued weakness in the U.S. housing market, concerns about slowing domestic and global growth, and the ongoing debt crisis in Europe, all resulting in weak customer flows, volumes, and lackluster markets. Keefe, Woods sees the bank posting revenue of $7.2 billion, well below street consensus. KBW seeing the biggest drag on Goldman's results being a 39% year-over-year decline in fixed income commodities and currency trading, offsetting an anticipated 48% jump in investment banking revenue. Concerns about the quarter reflected in Goldman's stock recently underperforming the rest of the banking index so far this year. Of course, it's also been hit with a number of regulatory probes and questions about how it will achieve the kinds of return on equity or profitability it has in the past, all of this under a new regulatory environment. Now, one way it is expected to do this is through cost cuts. Goldman planning to cut $1 billion in non-compensation expenses. So along with reported layoffs here in the U.S., the bank may also provide further clues about these cuts when it reports its second quarter results tomorrow. We'll be waiting.
Doesn't sound good.
No, it doesn't sound good. They don't have, that.
But this idea, and in Washington, the idea that somehow Wall Street is doing fantastically, right? I mean, and that somehow everything's still a go-go, I think is coming unglued right now, right?
Yeah, and you see here, I guess part of this is the fact that although they've got a commercial banking license, they're really not a commercial bank, right, in the traditional sense. You would think 0% Fed funds makes it pretty easy to be spectacularly profitable. You get to fund yourself for free. Mm-hmm. But Goldman's revenue depends on so many other things, so much more.
When it comes to the trading profits, I mean, haven't those always been historically given a multiple of 1 on Wall Street because they're so unpredictable? I mean, did investors get suckered into believing that they were so good at it for so long that was always going to be there and started giving them more credit for that?
Well, certainly it had in the past. I think maybe that's part of it. Yeah. That's actually a good point. Mm-hmm. It's part of it. But this quarter is going to be a little bit different. Still, their investment banking, business should be strong. JP Morgan's was stronger than expected, and Goldman's done very well, too, this quarter. It's just that the trading is not where it has been in the past. And as you said, they tended to do better than expected in that area. This quarter, they don't think that's going to be the case.
You going to say thank you?
I'm supposed to say thank you, right? I'm learning. Mary, thank you for that report.
Welcome.
You're
welcome,
right?
Yes. Okay. And we're happy to have you. Welcome.
Thank you so much.
We pay her. You don't have to. I mean, this is.
I don't have to thank her. What are you saying?
Yeah, but they don't pay me as much as they pay
let me just say
this is not right.
Let me just say that
this is not right.
Normally, they actually say, and this is something I just learned now that I'm here. They say thank you in the prompter today.
Right.
No, thank you.
No,
Mary.
yeah, you have to come
to
up
give
with
the producers a hard
Mary
time.
is like a six man in basketball because you are ready for whatever we
human
get you
spackle.
to do. Right.
I cover everything.
But you like Madoff type stuff, I think, more than Goldman. Well, Goldman's got its own little Madoff.
I like anything that's interesting. I mean, it's all interesting. So I'm lucky to cover it.
Where were you? Yeah, where were you? Where was she? Oh,
I was at
DSK?
GE.
DSK?
No. Last week I was actually on a GE manufacturing tour. I interviewed Jeff
Oh, I saw
on
that
Wednesday.
interview. I saw that interview.
And they took a bunch of reporters. It was really interesting. We went to see their research and development facility, and it's not Schenectady. I can't pronounce the name of the town it's in. And then we went to see the jet engine facility in Durham and a gas turbine.
Does he still care? Can you tell at all?
Care about us. He made a couple of comments about, the craziness in media, and then he kind of acknowledged me in the meeting, suggesting that was part of it.
Does he love us 49% as much
He
as
does.
he used to?
He does.
So about
He
49.
loves us. I think he loves us 89%.
Like a minority love, kind of, 49%.
It's still love.
You
It's
sure?
still love. Yes, I
I
think
don't think
so.
he ever loved us.
Well, now you're saying now he's not your boss anymore. Now he loved us. He loved me. Anyway, go ahead.
Time for a check on commodities this morning. And on currencies and gold, we have Boris Schlossberg, Director of Currency Research for GT Forex. On oil, we have Peter Butel, President of Cameron Hanover. Peter, rumors in Europe that they're talking about another big emergency release. Do you believe it?
I believe anything at this stage. This is a crazy market. It can't figure out whether it wants to go higher or lower right now. I think ultimately it's going to shake out on the higher side. But it's a very, very tough market right now.
Who cares about Europe in the oil markets? Do they care? Is it still all about China? Or are we worried about deflation over there?
Well, we are worried about Europe, but the strange thing is you wake up on any given day and you don't know whether it's going to be the dollar, gold, equities, whether it's going to be a fundamental factor, refinery problem, whether it's going to be the government looking to release it here or in Europe, China raising rates. Anything, it seems, can move this market. So I would say we do still care, but China is starting to move in to the number one seat right now.
Okay, Boris, we got gold at a record high. Why?
Gold is a record high because we have a pox on both your houses trade going on right now. They're looking at both sides of the Atlantic, and they hate what they see as far as the fiscal discipline goes, and gold rallies. Also, as a component of that, the Swiss franc went to record highs this morning, and that's really the trade in the currency market this week. Everybody's keeping an eye on that. The dollar Swiss at 80 is going to be a very key level. If we see more turbulence ahead, that's going to be a very, very big level this week for the currency market.
But bottom line, it sounds like you're saying when people are looking at either the dollar or the euro, they're discussing which currency has the least fleas?
Exactly. Right now, and I think Joe's point is accurate, that right now the market is basically gaming it that the U.S. debt deal gets done, whereas the Eurozone sovereign debt crisis is a much bigger problematic question mark.
So aren't you shocked? We're looking at this chart, $1.40 on the euro. Why is it still at $1.40? So many people would have predicted that. What you just said, if Europe is really the bigger question than the U.S. debt ceiling, why is it holding on at that level?
Well, when you're looking at euro dollar, that's really not the big risk trade. The big risk trade is euro Swiss. Euro Swiss is down to 114. Euro dollar is up because euro still gives you a much better yield than the dollar does, and everybody who is chasing yield still wants to own euros for the time being. But that story could end very quickly if
how closely are you watching the 10-year yield in Italy and whether or not it crosses 6%?
Yeah, those are very, very important numbers. As a matter of fact, Goldman came out and said that 7% is absolute breakdown point. At 7% Italian yields, the whole Eurozone really falls apart. So we're going to be watching it very carefully.
Lovely.
Yeah.
Thank you, Boris.
Anytime.
Alrighty. Good to see you guys. Peter, good to see you this morning as well.
Right.
Thank you.
They'll start planning another trip. It's rough, isn't it?
I know. I would love to see currency. I'd like to see crisis in Paris. If we could get back to Madrid.
Just get back to,
Kazakhstan, I'm hoping.
If there were any real prospect that we were going to default on treasuries, do we really think that the 10-year would be yielding 2.90%?
We say it every day on the air.
Okay, hold on.
Seriously.
I'm going to take the other side of that, which is
Right.
I remember the fall of 2008 as well as anyone here does. And if you had told me 2 weeks before Lehman Brothers went under that they were going under and that the market was somehow pricing that in, it didn't.
Okay.
Full stop.
But to that point, what did the 10-year yield do at that point? It fell, absolutely, even more, right? People piled into U.S. Treasuries.
Right. No,
they couldn't get enough
That's
of
true,
them.
but I'm just saying it's not always clear that somehow the market...
Has there been any story that's gotten more attention than the federal government's debt problems? Meanwhile, gold just keeps setting new record highs, which I think is a long-term indication, an indicator of our long-term problems.
Sean Egan.
Fair enough.
Sean Egan.
Coming up.
No, Shawnee, we are less concerned about a delay in payment than evidence of some tangible progress in reducing future obligations.
That's
what I think is
that
put
the market's going to be badly
all the time.
disappointed.
That actually is looking at what's happening. It's like we might actually get somewhere. They're not. It's not there because they're sure it's going to happen. Up next, it is crunch time. Howard Dean takes on Senator Pat Toomey over the debt ceiling. Squawk Box will be right back.